Hey everybody, morning. How are we doing? And if anybody took that beer money trade yesterday, it was a wild ride, right? I mean, wild ride. I know some people were sweating it, but there's dips. They occur. And, I did those statistics on that thing. We get those smaller dips quite often. So that's why people ask me, when would you stop out? And You know, I've thought about it maybe somewhere around, I start with considering it somewhere around 10 or 15 bucks. But also, that long term statistics sit in my mind, like most of the time we don't drop more than 3%, 99.7% of the time. But if you're closer to the money than that, you do have more risk of getting hit. So it's definitely one of those things to keep in mind. Welcome back to the show. I've I talk to all sorts of people all day, and you know, in the real world, we have problems. And the problems, So a story I was being told. Um, so this kid, he goes to school. They had a parent teacher conference. Parents, and the teacher, well, they were so proud, but they told my friend, your son's showing incredible growth, but he borrowed 12 crowns from his classmates and hadn't returned any of them, and convinced the school to give him a special project budget, which he spent on entirely on candy for the shop. And, well, now in the real world, we call that a problem. And we call that a kid that's about to get a lesson in economics from slightly less than amused classmates. But in the magical world of macroeconomics, we call this GDP growth, right? Expanding the consumerism. That's right. We're told to cheer every quarter when the GDP number comes out. The economy grew by 2%. The headlines scream. We all pat ourselves on the back. Good job. We made it. We grew it. But what if I told you that number, that holy grail of economic health, the one that we base pretty much everything on, including our debt borrowing for the US government, is one of the biggest fairy tales that's ever been told right now? The numbers are all made up, essentially. What if it's not measuring what we're actually producing, but it's actually circularly measuring what the US government is borrowing? I stumbled upon a fascinating piece of investigative reporting, if you will, that kind of confirms a suspicion that I've talked about for a long time: how GDP, gross domestic product, isn't really a measure of productive economic growth and health. It's more of a measure of transactions funded by credit, and that's the full faith and credit of the US government. It's basically the national credit card statement. Right now, we're kind of maxed out. It's actually just a measure of how much we grew the national debt, essentially. It's beautiful the way they've, it's just color all over the lines and kind of, but it's, when you boil it down, it's really just a measure of how much we're expanding the national debt. But they use that to base it on how much debt they can expand. It's beautiful. It's beautiful, right? Think about it. Since 2008, the last time the financial world had a little hiccup, our GDP has more than doubled. Think about that. Doubled. We should be living in a golden age, right? I mean, think about that. Everybody should be having more economic output than flying cars, robots, butlers. We should have everything, right? Does it feel like we're twice as prosperous? I don't think so. I don't think so. Let's look at the engine room of this real economy. Making stuff, industrial production, factories, machines, things that actually produce output to grow the economy. Guess what? The actual industrial production of the United States is lower than in 2008. We're making less stuff. We've lost our title as the world's leading manufacturer. We're now behind about $2.4 trillion in output. So if we're not making more stuff, where's all this growth come from? Well, remember that crown borrowing reference there and the candy? It's all coming from debt. Consumer debt has also conveniently doubled since 2008. Remember the last time we had a great financial crisis? We only had right around $9 trillion in consumer debt. Today, $18.6 trillion in consumer debt. So we're not saving money either. Back in the 60s and 70s, Americans saved 11% of their income. Today, less than 5%. We've been financing our lifestyles on plastic credit cards, that is. Every swipe, every tap, every Apple Pay, every, wave of the magic doodad to make the pixies go, the magical electron pixies go from your account to their account, get you more stuff. It gets chalked up as a win for the economy. But is it really? And here's the biggest spender of all in this whole story. The U.S. government is actually dominating the GDP. Government spending accounts for a staggering 40% of the GDP, yet they produce nothing. Absolute zip zilch nada. 40%. Let's be honest. The government, not exactly an efficient spender of capital, and it's not producing anything. So we've got a teenager with a credit card with no limits. They just spend more, goes into GDP. We use that GDP number to spend more money. You're probably not going to get a portfolio of productive assets from the U.S. government. You'll probably get a lot of candy, really, really expensive candy. Those hammers and toilet seats and gold, whatever. So we have a situation where the productive part of our economy is pretty much stagnant, actually shrinking since 2008, while the consumptive debt-fueled parts, they're exploding, and it's all being counted as growth to write more U.S. debt. It's basically a giant statistical illusion. It's like measuring your health by measuring how much you eat, not by taking your pulse or measuring your blood pressure. And here's the kicker. The government knows the numbers look bad. So they play games, right? They fake the numbers. They tell us inflation's only 3%. But if you actually use the same calculations that we used to use back in 1980, before they started getting creative with the numbers, guess what the real inflation number is today? 12%. That real GDP growth of 1.5% that everybody keeps bragging about, it's actually negative 7.5% if you use the same calculations we used to use. We're contracting. We're not growing. We've probably been in a suck down economy since 2021, when I put out videos that said we're officially in a recession, and then they redefined what a recession was. But we're growing. All on debt. Trillions and trillions of dollars of debt every 100 days nationally. What's the smart money do, though? Where's the investment opportunity in this house of cards? Well, you don't have to listen to me. Watch the people who print the money. Central banks around the world. They've been on a gold buying spree right now for 15 straight years. Now, US dollars used to be the most held thing by central banks around the world. Now, that's no longer the case. It is now gold. Gold has eclipsed US dollars. They've bought over 1,000 tons of gold for the third year in a row this year. They're quietly swapping out those paper dollars for real physical assets, getting out of the credit system they've created. That's your first clue. Now, the article I was reading to kind of gather some of these numbers confirms it. I mean, gold, physical gold, gold mining stocks. I mean, when the paper money fairy tale ends, real assets potentially where you can go. You need to look at top tiers like Barrick Mining, Newmont Corporation. If you're going to go after the gold miners, they're the ones pulling the real stuff out of the real ground, while the government is pulling fairy dust numbers out of thin air. The second, look for companies that actually make stuff. Boring, unsexy industry and manufacturing companies that have been left for dead. The ones that are part of the solution, not part of the problem. The ones that build infrastructure, the machines, the tools that create real value, not just credit-fueled consumption. And we also have to think about commodities like oil, copper, agriculture. When you print trillions and trillions of dollars, every piece of everything, the real price has to go up. It's the ultimate inflation hedge, the stuff that we actually need to survive and live. It's not the leading streaming service. It's not food delivery apps. It's real deal, hard commodity assets. And look, the GDP number is a political tool designed to make you feel good and chill out the masses, basically. But as an investor, you can't afford to feel good. We got to feel smart. We got to, stay strategic. And smart means looking behind the curtains at who the real wizard is, reading the fine print, understanding that when somebody tells you they were growing by borrowing everybody else's crayons, it's not a growth story. It's a story about having very messy ending when it all unravels. And you want to be the one holding the gold, not the IOUs. So GLD is not the way to play. Paper gold. So that's kind of what I dove into today. Hopefully, not trying to scare everybody, but things are kind of not the awesomest. Not necessarily the awesomest. So be careful out there, as always. All trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. I make predictions. Sometimes they come true, sometimes they don't. I've been talking about the fact that this house of cards is going to come apart. It's not yet. I keep saying not yet. I'm warning about the potential. I'm not saying we're at the top. I've not said that. We have potential to top. And we might even tag 7,000 or 7,100 even before we actually top. But we're getting closer to the top than we are at the bottom. This house of cards is going to unravel. It's a debt-fueled party that, while it could continue for another 1 to 3 years, I don't know. Be careful. This presentation is intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument, including stocks, options, bonds, forex, futures, cryptos, treasuries. If you trade any of that stuff, you might lose money. There's people that can tell you what to do, but nobody's going to do better than if you just take a vested interest in your own financial well-being and start taking care of, number one, you, right there. So we have the FOMC meeting coming in hot next Wednesday. We're sitting here on a Friday. Got a little dip in the market coming in here to the open. Looks like we just opened. Dang, get so many alerts. Yeah, we just opened here. And getting some PCE going to come out here at 10 o'clock. That'd be interesting. We don't usually dump that number out before the market's open. Would be very cautious being directional here today. These are University of Michigan, our poll numbers. They've been running pretty spicy on consumer sentiment. You can see it's kind of been declining for the most part. We were pretty confident back here. Haven't really recovered since COVID on consumer sentiment. Feeling pretty good. Now we're not feeling so good. And we're down to 50. Might even dip below 50, which would potentially be one of the lowest prints we've had. We'll see. Forecasting 52, but if we go below 50, that's not too, no bueno. It's just consumer sentiment, right? That's just the way we feel about it. Yeah, maybe because it's the holiday season, we're all happy and spending money, but I don't know. You tell me. Inflation expectations, remember, we're running hot. Real inflation running hot, but hey, everything's okay. We're down at 3%. We can keep rates high, blah, blah, blah. They don't have inflation under control, but they're printing money. Liquidity in the system. So next week we have FOMC coming up. Rate cut. They don't really have room to cut a rate, but betting markets think we're going to cut the rates. 3.75 is the expectation. Don't really have that in the charts. It's not really there. So the rate would be 3.5, which is where the market rate is, to 3.75. Right now we're at 3.75 to 4. We pick a range. We have this range, and if we come down, we're going to be right there with the market rate. And if the market rate spikes, guess what? They might have to do an emergency rate increase. I don't know if they'll cut the rate. All the jawboning is not pushing the real market rate. DGS2, Delta Golf CR2. You've never seen this before. Nobody's ever told you this before. 2-year constant maturity rate. Delta Golf Sierra 2, DGS2. That right there is the real market rate. And the Fed kind of chases it. The mainstream media narrative has always been that the Fed sets the rate, right? Guess what? Not true. DGS2 sets the rate. They just kind of chase it up and down. You can see it the last, this is not something new. This is something that's been going on forever. They chase that rate. Chase it up, chase it down. And right now, the crazy thing, this right here, 2 times longer, right here. This right here, exactly 2 times longer. You know what this was? Flash crash. What happens over here? Same song and dance, bigger problem. Higher up, further to go. It's happening slower. This was 2 times longer. This was 2 times longer. This could be 10 times worse. Just be careful out there, everybody. We're not, it's not falling apart today. Potentially not even next week. So I don't have a crystal ball. I got a bag of unicorn dust, but doesn't work to predict the market here. How do we make money today? Well, still in this downtrend. Kind of expecting this to break down. This is starting to be a little bit of a watermelon seed squeeze. The downtrend coming into it. The breakdown would be what I expect. Somewhere down the low 50s, if not in the high 40s, would be the bottom. And if we do that, we might get some hot wars in the Middle East. Get that price of everything back up. Price of oil, spike it back up in the 70s, like we did right over here when we fired off some missiles. And we dipped down in here in the mid 50s, shot some missiles, got the price back up, and it's been bleeding back down again. We take a dip down here at my target that's been on this chart for years. Probably going to shoot some more missiles in the Middle East, get that price back up here again, and we'll see what happens. ES, S&P 500 futures overnight. There's that warning little suck down. We keep seeing this, right? Keeps happening. This is not stability in the market here. We get these big sell-offs, dip and rips. We are holding higher lows, but from a price evaluation standpoint, when you look at these highs and lows are all very overlapping. When you skip one cycle, you look at the high here and the low that we make over here, the overlap. That's overlapping, nasty, kind of corrective type price action. Now, the warning here, we're not out at highs. We've actually made the bigger move down. This looking like corrective price action right here at lower highs. Guess what? With the bigger trend down, continuation can be down. I kind of thought we would come down, maybe retest this 6,600 area. As I talked about for the last couple of days, if we just keep bleeding this higher into FOMC on the 10th at 2 p.m. Eastern, probably going to get a negative result out of that. It's the warning here. We got that correction right. We got this correction right. We haven't done this one yet, though. Never exactly sure what happens. Just have some educated, wild guesses. So the closer we get to next Wednesday, which we don't have anything happening tomorrow or Sunday. Candle makers closed. And futures will open at 6 p.m. on Sunday, but general candle makers closed. Get below this level or above this level. It's kind of we open up the door for more volatility. Anything in between, while it can cost you a lot of money, just more sideways chop. The enthusiasm to go higher, just not there in that chart. Same here. Those two indexes, kind of in agreement right now. Looking for that bigger retrace here. If we can hold it, we can go higher. If we don't hold it, could open the door for a bigger downside move on NASDAQ, which is the NQ is the NASDAQ futures here. Why do I look at futures? You might be new here. You're like, why I look at futures? It's because when you look at the cash index, there's all these little gaps, sometimes big gaps, that's missing information. And there's no lower time frame you can go to see the missing information. It's like right now, we had a red candle yesterday, and then we gap up here. Like, what happened? Right? We just closed here and opened up here. Well, this helps fill in the data. Like, when the market closed, we were all the way back over here at 4 p.m. yesterday. 1600 right there. And then this morning, we opened up at 9:30 after some shenanigans overnight with a dip and a pop and a dip and a... Then we opened today. Hey, everything's okay. We gapped up higher. But that price action that happened overnight doesn't look so good. Be careful. Russell, Coming back down. Test this 15-minute. This one's set to pop on out, though. Of all the indexes that I watch, this one looks the strongest to get that 2600. And if we hit 2600 before Wednesday, that kind of bring all the indexes into agreement that we could get a bigger downside too. It's kind of scary. Gold still churning right here. Little baby move up. Have some upside potential to that ABC corrective. Trend down. Correction 1, 2, 3. Continuation would be lower. Careful on gold. I'd be a buyer of gold down here. We've kind of pushed this up despite my GDP warnings. We're at elevated prices and we may see a suck down here before we can proceed higher up to the $5,000 area. Bitcoin working on yet another retrace. Saw a big long question in the chat there. Thank you again for all you do since Bitcoin passed your October timeline for max price. Would you be surprised and shocked? I've talked about that quite a bit. You should just you should watch more often. We are sitting here with a move up. It started here, ended here, a retrace to a 618. We held, turned up, made a higher high, didn't confirm, going higher, and now we're pulling back again. So guess what we're looking for? We need this low to this high. Run that fib line. Where is it? It's right here. Here's the low. Here's the high. Right there it is. Pretty much right where I was drawing it. 87.7 on this dip today. May continue into tomorrow. We need to hold that and push higher. Now this is the bearish resistance target right here. This is kind of the minimum I thought we would bounce up to, 96. That's still bearish. If we stop right there, we need to get this level, 106, to confirm any possibility of going higher. If we don't maintain that kind of stuff, if we break down below that low, break down below this low, it starts cascading through, pretty much confirming 10 months of crypto winter. Talk about that every day right here. So if you're feeling left out of the updates, they're all recorded. You can watch every single episode of this show. Like, nobody got time for that. You can use AI to summarize it even. So it's all right here. Ethereum, same kind of situation. Although we did hit a level much higher, that creates a little bit of a coin flip. Is this going to be more bullish? If we could get that level, 3360, that would be more bullish, especially if we get above it. But where we turned is kind of a coin flip. This was a bearish resistance, and I was concerned here, but we came up and got through it. So now it's a little bit of a question. Since we didn't confirm the more bullish level, stayed down here. We have this move up. We have a retrace to a 618. Got to move up and a potential retrace to a 618. Back down here around, probably somewhere around 2,900 would be my guess. See how close I am on that. Yeah, look at that. 2,900. Think I've drawn a fib or two. Right there. How do I do that in my head? Well, I looked at in 2024. I looked at over 40,000 charts according to TradingView. I'm probably rivaling that again today or this year. When you draw fib lines constantly all day long, you kind of I can pretty much tell you within a couple bucks on a higher price stuff, then a couple pennies on a lower price stuff, where the 618, where the 1272 is, because those are the levels I use all the time. If you have a hard time doing it, you just got to practice. You don't, what's the difference between a new plumber and an expert plumber? Years of practice, right? So it's there's no substitute for seat time. NKD, which is the Japanese stock market futures, I use this as a liquidity indicator for the market. Liquidity has been on a correction. It is up to resistance. And A, B, C downside potential as long as we're under this resistance. If we can get up here, confirm above like 51, like these, confirm above this level over here, right over here, probably going on up. 53, 54, and if you hear a bunch of banging, they're rebuilding the office underneath me, so I do apologize. Not much I can do about that. It was crazy in here yesterday afternoon. And they worked. I think they were still working when I left last night at like 6:30. Dollar index, the DXY. We're sitting right here at a critical spot. I said if we get below 98.5, we're probably set to make a lower low than we had in September. This should be interesting how this plays out. I haven't been very keen on the way this price action was. It reminds me a lot of the way the S&P 500 is, right? With the choppy overlapping price action. It's not exactly bullish. Now we've broken below the uptrend of lows, and we have potential to push this all the way back down here again, back to the bottom. Now we potentially bottomed out, but this price action off that low, not exactly super strong. Now it could. There's the potential. The market can do anything. It is possible that we maintain some sort of deep retrace higher low and then go on to be bullish on the dollar. It's just not the most likely scenario. That does happen, but it's more rare than this just completely failing out and dropping down for a lower low. Apple right now, potentially in some resistance. 292 is where I expected it to tag, and we came up shy of that, but you can see on the smaller fib lines there, we actually did tag a 272 retracing, probably retrace to back to this breakout, this little mini breakout, and then if we can manage the mustard, we'll push on up there and test that. Amazon starting to look like we're going to confirm something really bearish here. I know I did that kind of sloppy. This could push down to a lower low than we saw back in April, or at least get in the vicinity of it. Google still gunning for that 337. Then we'll probably do a bigger correction. Could take us all the way back down to retest this breakout. Back here. Meta hit the roadmap line from the bottom. It would look best with a 618 retrace, probably back down around 620. If we do that, kind of confirms that this was the bottom. If I do this and hold, turn higher, confirms that was the bottom. This is a bigger potential uptrend, and it could last for a couple years. Could take us up here. 11, 12, 1300 on Meta. Microsoft, still trying to figure out if that was the bottom. There's potential. We bounced up, found resistance, retraced, held the 618 so far. Coming up, if we can break above this, probably going on up. We missed that 565 target up here, so we'll probably go hit it. Came up shy, so that'll probably be the next upside. We came up there. Like, this is the same price action I talk about all the time. Look, came up here, missed. First move down, retrace, retested the breakout. That sets us up for going higher if we can hold on to it. If we don't hold on to it, deeper retrace action, probably down around 400, 420. Possible on Microsoft. NVIDIA. So far, we're holding the roadmap line. The resistance right up here, 195. Get above it. Can potentially go test higher levels. So far, we've held that 212 target right on the money. 220, 230 would be the next upside resistances here. If we can actually get the energy to come back up here. If this rallies up here and turns down, we can see it come back down to retest the breakout of the highs from last year. Right there. Tesla is trying its darndest to hold on to this 450 level. This is kind of confirming that we're going to see a bigger upside move right here. Don't be surprised if we pop right on up here, 488, 501. And the bigger upside target for this bigger correction that we did from last year in December down to the bottom there in, what was it, April. 550 would be the upside target there, possibly up to 600. Looking for that continuation right up in there, 550. It's probably my biggest position right now. Well, probably. It is my biggest position right now. Mara was for a long time, and Mara looks left for dead, and they took on way too much debt, and they effed it all up. And when they did that, started aggressively starting to wind it down. Now, my biggest position is this baby, because let's go. Once we get up here, though, probably going to ease up. Foot on the gas till we get to the destination. Netflix, look at that. It did the move I was looking for. That's probably the bottom. That was probably the bottom. Dang. I can't even believe I got that. Dang. Go poll. What was it, like a month ago I called that? I was like, I had that low. I've been talking about that for like a month, right? I'm surprised. That could be the bottom. That very well could be the bottom. Dang. Been talking about that level for, man, shocking. The news came out. They won the bid for Warner Brothers, and I guess they're going to pay $27.70 a share for the rights for HBO, Game of Thrones, Harry Potter, Batman, all the Warner Brothers franchises. They'll get HBO, they'll get the streaming services, and Discovery will keep the cable networks. So WBD. See, they're popping on the news. 2770 is the deal. Has to pass all the regulatory scrutiny. Expected to close Q3 2026. Oops, forgot the 20. So your HBO subscription probably going to go up to like $900 a month. And who knows what they'll do to Game of Thrones. SMX, well, that's a dumpster fire. I wouldn't touch it. Oh, okay, this is a warning. When biotechs are on the top of the list, it's a bad day in the market, typically. Be careful today. Be careful. This one has a reverse split. Dumpster fire. Ulta, probably going on up to 525 or 625. Rubric. Maybe that was done on that correction. 111 up there. Let's see. Humana. Oh, I like it. If we get through the roadmap line, that sets up a bigger upside potential. Yes, sir. The upside target potentially. So here, you just do this right here. If we break through this downtrend of highs, upside target 440. Right up there. We tagged the target on the downside. Got it. Nailed it. The target on the upside here. For Humana. Lumentum coming up to that next resistance. Watch out for another pullback. COHR coming up to more. Wow, that thing just ripping. When this ends, it's going to be rough. LU, potential that bottomed out. Could be a nice one. Look for that to get back up to 349 to 510 upside. Oracle could be done. Like that retested the breakouts. Like that may be finito on the downside for now. Coming back up through 270 sets us up for 370. ALB, I know some of you like that one. Not really making much. Still grinding, trying to get through this resistance. We spent like 5 months grinding here. Now we're back into it. I don't expect major upside for a little bit. ALC still underneath the roadmap line. Decliners. Oklo still trying to hold on to the roadmap line. DocU got whacked a little bit on earnings. Dang, come on. Need this to get off the mat. Was that the final low? Hopefully. Need to get above the roadmap line to tilt this higher. I have shares of this. Been selling upside calls. Coinbase not indicating anything. MSTR not indicating anything. Leverage Netflix. This could be a way to play Netflix right here with lower exposure and no timeline on the options. SoFi probably gonna hit the roadmap line. NVIS. Here's the high, here's the low. 114 potential. Bloom Energy roadmap line. Let's look at some setups today. I got 25 of these. This is a trend pullback continuation pattern off the roadmap line. Roadmap line, if you don't have it, link, go to the channel homepage. click underneath me, the logo, channel logo, go to the homepage, watch the video that's pinned to the channel. Gives you the code. If you're like, code, I don't want the code, but that video does explain how it works. But if you don't want the code or, all that stuff, you can just buy the easy button, $5, links in the description underneath, I guess this way. Link under the description down there. Expand it out, click the more button, $5. Click the easy button, get it on your chart. Market roadmap, it's on. It's right here, market roadmap. And yeah. There you go. I explained how it works. So it's a trend pullback continuation. So price tends to bounce off of this line, either from above or below. Now, in an uptrend, when we retrace, we expect to get continuation. That occurs 75% of the time when we get a close above the 618. We move on up to this level. Now, this level is not in the video that's pinned to the homepage. I've added it recently. It is 90% of the way to the 1272. The 1272 has proved to be 70% likely to be hit, and the 1.1448, which is 90% of the way there, is 75% likely to get hit. I don't like to lose. I like to up my win rate as high as possible, so I go for that purple line target. It is a fib line I made up. It's not going to be on anybody else's platform. It's kind of my call it proprietary. It's not really proprietary. It's just 90% of the way to the 1272. Take 1272, multiply by 0.9, 90%. Why 90%? It's because I did a lot of empirical data testing and found that 90% was the place to play. That gives you the 1.1448. Add that fib line to your tool set. Use it as a target. That's kind of how I roll. So it's my own invention to up the win rate. Right there. Right in that tool. So when we get the close above this, 618, the target is right up there. Now, you may be like, well, how often does this occur on this particular ticker? And I have coded up my own back tester. 80% on this one, but as with anything, there's caveats. Right here, not a statistical population. 30 is, 20 is not. So these numbers, take them with a grain of salt. Right there. BTC. We've got that high, we got that low. There's the entry, 132.93. Targets, 27.55. That one's kind of not great. Not a trender. Here's another one, high, low. There's the entry, 33.48. You may be asking, well, how do I get these? Number one, you can be a Termite Trading Lab member. Links in the description. Termite Trading Lab gets these. There, I have a tool that runs and finds these every day after the close and creates a list. Or you can just come back and watch the show every day, and I go through these pretty much every day, all the ones set up. Bots on the daily chart anyway. Now I have other tools like Apollo that finds them on a 30-minute chart, Triple Threat Trader finds them on a 1-minute chart, Cashbot finds them on a 2-minute chart, on various tickers. EchoTrades finds them on a 1-hour chart. So 39.24, target, no statistical significance on the history. Here's your high, here's your low, there's your entry, 118 targets, and that one just kind of average. Wow, what a pullback on that one. Here's the high, here's the low, there's the entry, upside 107, 26.83. That one's probably 4 trades is not going to wreck this win rate here. 4 losses in a row. So this is probably one you can make some money on right there. ESI. Entry, 29 target. Robinhood, look at this. Does not have any history really. It's only happened once in the history of Robinhood. 163, the target right up there. Now this could fail. It could be a fake out and we go down. So be careful. You can flip a coin and get heads one time. Pretty easy. INFL. Here's the high. Here's the low. There's the entry. 46 targets. Like, why do the statistics if most of them aren't hitting the, aren't valid? It's just cause, like, some of them are. Sometimes we find the diamonds in the rough. Most of these aren't. But the historical average is 75% of the time and a profit factor of 1.2. So when you don't have enough here to mean anything, you just fall back on the historical 75% of the time, 1.2. KGS, There's the high. Here's the low. Entry 38.70. KMI. Kinder Morgan. High. Low. Entry 29.40. KN. Oh, that's a really, this is classic right there. Classic, beautiful. Move up. Nice retrace. Bounce. Entry 25.10. Can't say statistics mean anything, but that's a very, this one's very, very pretty. Almost textbook right there. If it goes on 67.42. This one a little more chaotic. And on the bigger picture, I hadn't found the entry yet. This is where it, so I have a Python tool that runs and finds these. And that's the bounce it picked up on because of that negative below the roadmap line action right there. But I would probably use this high if I was actually going to trade it. MVC, I don't want to miss out, so I have the tool set to very aggressively find these, like this one right here. I wouldn't trade this. It's a downtrend. Just be careful. Hath. Wow. Look at that baby. Entry target's only 1984, so be careful. Not very high up there. PTEN. It's kind of a downtrend. Not sure I'd chase after this one, but this one could work out. It's also low price stuff. Things under 20 that don't always work. RPG. Role playing game. 49.40 targets. That one's pretty darn nice right there. 8 trades is not gonna wreck this win rate too horribly. The profit factor 5. I mean, that one's probably gonna, that's probably a trender pullback continuation. Has a history of doing it consistently. Pretty nice. Schwab. Take a look here. The high, there's the low. Entry 100 target. SLDB. High, low, entry, $8 target. TSLL, I'm already in this for 5,000 shares, 25 targets. TSLT, it's basically another TSLL target, 33. USXF, the high, here's the low, target 60.58. WMB, high, low, entry 67 targets. That's the list. Bias for the day, very cautiously, optimistically bullish, but be careful. We're probably gonna coming up on that high from the B wave. We could grind higher, but it's looking kind of scary for a bigger pullback. We might grind into FOMC, but be careful out there. Count your save, maybe your own. I'll be back on Monday, same bat time, same bat channel, 9:15. Do it all over again. Be careful. Have a great day. See you on Monday. I'll be on Market Masters at 11:30.